We have the management of Quess Corp. Now, this is a big one because what we're going to see is a three-way split of this business. It's around 9,000 odd crore market cap business as of now. And they've announced this, on the back of the three different types of businesses that they have. And we have with us Ajit Isaac to give us more perspective. He's the president of Quess Corp. And he joins us now. Welcome to NDTV Profit, sir. Trying to understand, first off, with regard to the logic, rationale, of course, it's value unlocking in a big way. But what does this do for the overall business for Quess Corp? Give us some perspective.
The first thing is that it's a progression on the path of simplification of our holding, which we announced in the market about 2 years ago. So it's taking it to a logical conclusion. The second is that it helps each company to get a focus that it needs. Each of these companies have scaled and become market-leading entities. Our staffing business is the largest in India. Our BPM business, in which we bought from the Tata's called Tata Business Support Solutions, is about 55,000 people strong and among the top 3 in India. Our facilities and asset management business is the largest by the number of services that we have in it. So all of them need attention and focus because they all have its own nuances. It all has its own rhythm and cyclicality. So each company also needs its own capital allocation strategy, its own compensation structure, its shared services backend, etc. So through this process, we hope to be able to give the focus that each company needs. And lastly, there must have been some, conglomerate discount that's usually applicable to companies with multiple business lines. So we hope that will be removed as there's an investment thesis clarity that emerges through this process. So that's all of the summary of why we're doing this.
So you own 12% yourself, as well as you have Fairfax through its entity in Mauritius, which owns roughly 34%. Will that shareholding within all three companies not change? Is that the thought process behind this? And would you all continue to drive it from a management perspective, each of them in their own silos?
Well, first, you get one share in every one of the resultant companies. So if you own one share in Quess, you get one share at Digiti and one more share at Bluespring. In promoter shareholding, Fairfax owns 34 to 35%. I have about 22 to 23% all put together. So it's a combined holding of about 56, 57% that we have. Promoters will, our contribution of ownership will remain the same.
Understood. So I'm just going to take a 30-second pause here because the Nifty has just hit its record high. In terms of in terms of the contributories on the Nifty which are contributing to these gains, you have ICICI Bank, ITC, both of which are contributing roughly 50 points to the gains on the Nifty today. There you go, 1.6% higher, ICICI Bank, and ITC also roughly 1.8% higher. In terms of the losers, not much to talk about. You have L&T, TCS, just about contributing 15 points. So it's a solid coat of green on the Nifty. If we can have the heat map as well, that will signify that most contributors are positive. In fact, 35 plus contributors positive as we trade along today. So definitely we're seeing a new high on the Nifty, 22,137. Previously, we were at 22,120 odd, 127 odd was the previous record high. There you go. We're moving from strength to strength, above 22,140 as we speak, 100-point gain on the Nifty. But let me bring it back to Ajit. Ajit, when I'm looking at the two businesses which are being demerged, let me first talk to you about Digiti, right? The revenue milestone that you have for this business is $1 billion, currently doing roughly $280 million in revenue. How quickly does it go to $1 billion?
Sure. So let's look at the composition of the business first. It's got 3 elements in it. It's got a BPM business, InsurTech, and it's got a HRO business. The BPM business is what we refer to as a customer lifecycle management services line that we've got. All of this business together has been growing at about 20% per annum on a CAGR basis for the last few years. We expect that to continue. If it grows from 300 million on a 20% CAGR for the next, let's say, in a 4 to 5 years' time, we think it'll get to about 700-ish. So on $1 billion target or ambition, we have visibility to it reaching about, let's say, 700 or so on the basis of organic growth. Some of the growth that will come will be from international growth and from acquisitions that we could do in the future. So we have to watch for that.
Sure, and what gives you the confidence that this on a higher base will continue to grow at 20 plus?
That's a good question. If you look at the HRO business, it's an underpenetrated business, and we are a market leader. We process 1.3 million payslips per month. We think there's an opportunity to take that business outside India. A dollar-denominated growth will give it a greater ability to grow that business. In the BPM space, we've just opened a center in Manila. We're getting much more traction in international markets, and international markets will drive this. In addition to that, we think that there's an opportunity to also grow two more verticals in this space, either in the BFSI space or in the healthcare space. So we're working around that. And once that comes to play, we'll expand the range of things we do from what we have in the domestic market to international markets, particularly with these two verticals. InsurTech is an area that we have been invested in for a while. MFX is our operating entity in the US. It does about $30 to $35 million of sales right now. We're adding capacity to that company, and we believe that with the additional sales ability that will come in there, it'll have more horsepower to increase its revenues. So that is how we think we will grow this company on a larger base.
Sure. Before I come to Bluespring, one quick question, or rather a couple of quick questions I'd like to club. Would it be fair to therefore say revenue goes to $1 billion by 2030? Is that a fair kind of a number? And therefore, where do margins lie? If you can give us a sort of range in which the margins will move in this business.
Yeah, I think you've hit it to say that we should be by 2030 we should be getting to $1 billion in size. Margins are in the high teens for this company right now. It's upwards of 16-17%. And if we can remain in the high teens by expanding growth to reach $1 billion in size, I think we've done a good job. So we don't want to compromise the margins while we keep growing the company.
Understood. Now, let me come to Bluespring. Again, the opportunity size here is fairly large. What's the kind of growth path that this one will chalk? Where do you see it by in the next 5 years, say 2030, we'll round up by a year. And where do margins lie for this one?
So this company is about 3,000 crores in size right now. It's about 5% EBITDA margin. It has services in facilities management, food and beverage, security services, telecom asset management, and in industrial asset management. You have to look at the environment to get some clues about how this company could grow. If you look at India right now, we have a capital and capex and infrastructure investment aspiration of almost about 11 lakh crores for the next year. We are seeing ports, roads, airports, highways, metro systems, hospitals, education institutions, public utility spaces, all growing fairly rapidly in India. New assets created of this type, all of them need maintenance. And there's an increasing propensity for all of these assets to be maintained by third-party service providers. So we think we're rightly positioned to leverage the opportunities that's emerging in a new India today. And the concept of Viksit Bharat and being a developed country by 2047 is very relevant to the growth of Bluespring as we make our business plans. One more thing I want to bring in here is that business services as a contributor to the economy is maybe about, let's say, less than 1% today. We expect that to climb to about 4 to 5%, which are developed market contribution levels. So as the base expands and penetration also goes up, the opportunity for this company will really open up. If you look at our food services business also, it may be about 200 plus crores of revenue size today. That can maybe double in 3 years' time. So there's tremendous scope for opportunity for growth in Bluespring. And I think largely we'll be limited by our ability to put capacity together rather than the scope of the opportunity outside.
Sure. With regard to the timing and the execution of this, how quickly do you think that this demerger will go through?
So this demerger should take between 12 and 15 months. We have regulatory approvals that's required. We have to go to SEBI, we have to go to NCLT. And I think by maybe next April to May or so, we should be having more light on this.
Okay, so that's what it's all about with regard to guidance. Thank you so much, sir, for all of that perspective. Of course, that's the chairman of Quess Corp talking to us live with regard to the demerger and where we can see some of these companies go.